Hello and welcome. You're watching Countdown right here on Bloomberg Quint, the all-important day of the RBI policy. Ahead of that, well, the markets give up. You've got the Nifty as well as the Sensex down almost 1%. We'll talk about all of that and more, but just let's run you through the headlines for the moment. After 2 days of sideways movement, markets are witnessing weakness in trade ahead of the RBI policy. The Nifty trades around the 10,800 mark. All sectoral indices are trading with cuts. A majority of 52 economists surveyed by Bloomberg expect the Monetary Committee to keep interest rates unchanged today. Investors await Governor Urjit Patel's first public address after the standoff with the government. And Tata Motors is among the top losers on the Nifty after S&P Global Ratings downgrades the stock for the second time in 5 months, cites headwinds from JLR as the reason for the downgrade. And Kesoram Industries falls the most in over 2 years after the company plans to demerge its tire business into a separate entity. Good afternoon, Neeraj. The RBI policy in just a few moments from now, but ahead of that, the markets look a bit edgy.
Yeah, in part due to what's happening globally as well. I think Europe too, Devina, hasn't started off really well, and that's probably putting that added pressure on the markets. Remember, when we started the trade, Dow futures were trading reasonably okay. But this is what Europe is doing, about 1.25% off for each of the key indices in the session today. So not the best of starts for the European markets either, and that's weighing in on our markets too. The Dow futures too, very, very flat. But bring up the mid-cap, firstly the mid-cap and the small-cap indices, and then the heat map, and show you what's moving and what's not. There is weakness at the broader end of the spectrum too, and the heat map should now come up on your screen. Is there pain? Well, needless to say, there is. Save for IT, I believe most of the other indices and most of the other stocks have a fair bit of pain to themselves. IT quite up there. So Tech Mahindra and HCL Tech amongst the top gainers. Couple of heavyweights marginally in the green, adding that little bit of support to both HDFC as well as Reliance Industries are not doing all that badly. HDFC Bank about 0.13% higher as well. What's not doing well? Well, commodity names correcting. So Vedanta, Hindalco, currently under pressure. Sun Pharma corrects another 3.5% in the session today. Massive short build up in the run up to this the last few days, and in today's session now breaking the 435 level as well. So do watch out for Sun Pharma 2 in trade. And by and large, a clutch of stocks which are looking very, very wobbly in trade. The sentiment, Devina, isn't quite strong on the large cap space. I reckon the mid caps are not too far behind as well, about 1% lower for both the key indices. Suffice to say, a fair bit of pain. Well,
it's across the board, Neeraj, and specific stocks more than the others have lost significant ground in today's session, and I'll highlight those in just a few moments. But on the back of some specific news, you've got stocks like Kesoram Industries, which has lost considerable ground, and like we already highlighted, one of the steepest falls that you've seen in Kesoram in closer to 2 years post its announcements of its tire business demerger. Tata Motors Auto, DVR, is following suit with what Tata Motors, the stock is doing in today's session on the back of that S&P downgrade that's come in. Bharat Forge, on the other hand, is looking weak as well in today's session. On the move, you've got an Edelweiss. Remember, you had some news regarding the possibility of it selling its wealth as well as AMC, a portion of it, and the stock has been reacting positively in the last 2 to 3 trading sessions. Along with that, Shankara Building Products see some bit of short covering. So the stock has been pummeled of late post its post its media address, post its numbers, and some bit of recovery has come back in. Amongst other stocks on the back of heavy volumes, the Prakash Industries is one that's trading closer to about 20 lakh shares. It's witnessing weakness. RK Forgings, that's about 30% higher in terms of its average 20-day volumes. That also loses ground. And a Jamna Auto on 16 lakh shares that have been traded is down closer to 3%. But what's happening in the more liquid universe in the futures and options space? Let's quickly go across to Agam Vakil, who's joining right now with more details. Agam, good afternoon.
Good afternoon, Devina. Well, the Nifty is currently trading below 10,800, and that perhaps is showing and indicating some weakness, considering an increase of around 2.5% in open interest. Some amount of shorts. I reckon a lot will depend on what we have from the RBI policy, its stance, and of course their body language. The Nifty Banking Index again is declining further. While we did see a lot of unwinding on the previous few days, we've now started to see some accumulation of shorts in the Nifty Banking Index. So the weakness there is evident. The India Volatility Index has come off even more, down 2%, now below the mark of 18. It's inching towards 17.5. This is something that a lot of your traders will be happy about, considering the lack of anticipation of volatility. But moving on, when it comes to changes in open interest specifically, what we're keeping an eye on is around the 11,000 mark. As you can see, we have seen further unwinding around 11,000 and 10,900. On the other hand, more writing coming along around the 11,000 and 11,100 calls. So watch out for those levels. And in terms of stocks, Bharat Forge, of course, stands out right at the top, considering a 23% increase in open interest towards fresh shorts, even as the underlying declines by 9% or rather 8%. We also have weakness in Jindal Steel and Power, 17% increase towards shorts. We have more shorts build up in several other counters as well, and BHEL is also one of them, 16% added there in open interest. And in other counters which are also weak in trade, we do have something like a Reliance Capital. In fact, we have weakness in a whole host of these ADG group companies. Reliance Capital is standing out, down 4% and 12% added in open interest. So broader markets not looking any better than benchmarks at this point in time, Devina.
All right, Agam, thanks very much for that. That's a quick update on the futures and options space. Well, let's get you some more stocks to talk about then in intraday trade. HDFC, the country's largest mortgage lender, which like most listed NBFCs saw its stock price take a beating amid the liquidity scare, has now managed to make up for all the losses, unlike most of the other NBFCs. Now, Sharad Dubey is standing by with more details about HDFC Limited. Sharad.
Yes, Devina. The HDFC, amongst the various housing finance companies, HDFC has actually recovered its losses on November 28 from the dreaded date of September 12. So this date was the day when the reports of ILFS repayment issues had come up, and also the reports were there of DSP mutual funds selling the commercial papers of DHFL at a discount in the secondary market. Now, if we see the chart, we see DHFL has crashed almost 63% and India Bulls and PNB Housing Finance has crashed around 30% while the Group Finance and LIC Finance, Housing Finance reduced by around 5 to 8%. But the real thing which we need to see is HDFC, which has risen by almost 4.3%. So basically, Morgan Stanley had reported that this HDFC stock is having a real normal returns of around 18% over the last 4 years with a very low volatility. Apart from this, the company is having a very strong deposit book and also a diversified liability. Back to you.
All right, Sharad, thanks very much for that. That's our chart of the day segment, and HDFC Limited within the NBFC space doing relatively well as compared to some of the other non-banking finance companies. Let's take a look at what are the other 4 stocks that are buzzing about in trade today. Yash Upadhyay is here to run us through the list of those Fab 4 stocks that have made it to his list this afternoon. Yash, good afternoon.
Afternoon, Devina. I'll start with the paper stocks. No, they are buzzing in trade with something like a Ballarpur Industries that is up about 3.5–4% but after the government imposed an anti-dumping duty on uncoated paper imported from Singapore, Thailand and Indonesia. So that one's up about 2.5%. Cadila Healthcare is up close to 1.5% after CLSA upgraded their rating on the counter to a buy and hike the target price as well to 430 from 410 earlier, indicating a potential upside in excess of 20% from these current levels, as they see the risk to reward ratio being favorable given that the stock is trading 18 times its FY20 earnings. Kridan Infra is up close to 4% after the subsidiary of the company received a big 100 crore order for the construction of a highway project in Maharashtra, and Edelweiss continues its rally on the upside, gaining for the 4th consecutive day. On a month-to-date basis alone in December, it's up close to 13% with volumes coming in significantly higher. Back to you.
All right, so 4 stocks there, all of them in the green and heavy volumes picking up on all of those names. Yash, thanks very much for that. The other important aspect, aside from the monetary policy that comes up today, is going to be the OPEC meet tomorrow. Saudi Energy Minister Khalid Al-Faleh dismissed suggestions that OPEC and its partner producers will cut output at the next meeting. Calling these assumptions premature, he said that the market should wait for the outcome of the Vienna meeting to be certain.
What we said in Abu Dhabi is that projections are that there will be 1 million barrels of oversupply and that we will wait until we get to Vienna and ascertain what that number is. And the next, I think, road to cross is whether all countries are willing to come on board and contribute to that cut.
So what are the expectations going into the meeting in Vienna tomorrow? Anne-Marie Auden of Bloomberg News reports from Vienna.
Well, as you saw in the market, we did see Brent prices drop relatively flat at the end of the day yesterday, and that was based off his comments, pouring some cold water on the fact that we're for sure going to be getting a deal and how big it'll be. He still left the door open, but really it comes down to the wire. Today is really going to be a key day. It's when every country part of this group can really put their cards on the table and say what they're willing to cut and how much. That's when we have the Joint Monitoring Committee, which was set up in 2016 to monitor the deal. It's the day that we get Mr. Novak and Mr. Al-Faleh in the same room, and that is critical because what delegates are saying to us is that these two countries still differ on how much to cut and how to share these cuts, and of course from what baseline. Some people they should cut from October levels, while some delegates are saying we should stick to the 2016 deal and cut from the 2016 levels. So the problem right now is the negotiations, and it's coming down to the wire. What we could possibly see, like we saw in 2016, is that President Putin needs to make a phone call to his counterpart, the Crown Prince of Saudi Arabia. In 2016, the kingdom had no problem really bearing the burden of these cuts when they made this deal with the plus part of this group, really Russia. But on his way to the G20 in Nigeria, Khaled Al-Faleh said, we will not do this alone. We will share the burden equally. So I think that's what it comes down to. They do not want to be seen as they are taking on the mass of these cuts. And that leads to your second part, that President of the United States, the White House has offered some serious and strong support to the kingdom following the murder of Jamal Khashoggi, the Washington Post columnist in Turkey. And by doing that, they walk this fine, complicated line, and whether or not they're willing to defy the president's calls for lower prices, given the support the White House has given MBS.
Nevertheless, time for a short break now. When we return, full tilt towards the monetary policy with our experts. Stay tuned to Bloomberg Quinn Live.